Oh, we're live. Hey guys, thanks for joining today. I see we have a number of people here. Maybe we'll wait just a second longer. Um, but yeah, thanks for joining us today for our first Market Protocol community call. We also have developer calls that we'll put a link to later, but this is the first sort of general community call. I'm Seth Rubin, one of the co-founders of Market Protocol. I'm joined by Phil Elsasser and Collins Brown, our other two co-founders. Today, we're probably going to be on for about a half an hour. We'll talk for maybe the first half of the call, and then we'll follow up with some available time for questions. Overall, we are going to just sort of treat this first call as mostly an intro call. There might be some people listening that are new to the project or aren't as familiar with the project. So we've had a couple other sort of interviews out, but we just wanted to take most of this call just to give an overview of who we are, how we got here, what we're doing, and sort of what our short-term plans are. And then obviously, if you guys have any questions, feel free to put them in the YouTube link, and we'll try to get to some of them later. So why don't I let one of my partners, why doesn't Colin start here?
Sure. I'm going to talk about the background of the team real quickly, how we got involved with crypto and blockchain in general, and then why we like market. So Seth and I started trading derivatives together in 2005 at the same firm. We were part of the same training group, and we were it was in the middle of July 2005, and we've been trading together off and on for the last 13 years now. And we've been partners on and off at various times. And then 8 years ago, Phil became part of our group. And Phil was the CTO of the trading group. So it was really great to add him because he was able to develop some code for us and kind of take our trading to the next level, which is really nice and exciting because he's able to use those skills now in the blockchain related space as well.
So it looks like Collins may have dropped from the live stream. So why don't I just sort of pick up where he left off? Yeah, he did drop. Okay, so Collins will join us again later, part of being live. All right, so he was talking about the team. So as you mentioned, we've been working together for a long time. Towards the end of 2016, early 2017, we decided that Market Protocol was something that we wanted to pursue full time. A number of the issues that we wanted to address with Market Protocol, basically the first thing that we wanted to address with Market Protocol was a way to deal with custody of funds. So being traders coming from a traditional centralized world and also seeing how a lot of the crypto exchanges worked, we saw a lot of good opportunities to decentralize what have been sort of some legacy centralized issues. So we see a lot of different centralized exchanges having custody of funds issues. So for example, one of the main things that right now we see centralized exchanges do, and participants focus on removing their funds from exchange wallets, for example, when they're done trading. The reason they do that is they're concerned and worried about exchange hacks. So that's a good example of how the crypto exchange system right now really just deals with that by putting on a Band-Aid, by having people withdraw their funds. So that was one of the first things that we focused on in terms of Market Protocol. Another issue that we wanted to address with Market Protocol was a way to sort of give traders and give users an opportunity to implement derivatives. So what derivatives are at the highest level are an agreement between one or more counterparties that basically they agree to transact in what's called a base currency based on what and how something else, the price of something else moves. So a good example of a common derivative is the S&P future on the CME, which basically traders make or lose dollars based on how the basket of S&P 500 stocks move. And they do that without ever taking custody of the underlying stocks. So that's a really important thing to understand with derivatives. You make or lose the base currency based on how a reference asset moves. So one of the things that Market Protocol lets you do then is it lets you address price volatility. It allows users of Market Protocol to basically hedge their trading relationships. So one of the biggest issues right now in the blockchain space in general is the fact that right now we can't decouple price volatility from utility. So a good example right now to help sort of illustrate that would be, say, for example, that you are a owner of Salt Lending tokens, and Salt Lending is a project that is basically allows users to borrow fiat against their crypto holdings. But the Salt Lending token primarily acts as an access token. It allows users to access the platform. The issue right now is that the volatility of Salt Lending tokens, the price volatility of Salt Lending tokens, far exceeds the potential utility that someone would gain from holding those tokens. So, for example, in the last few months, Salt Lending tokens have probably traded from $2 to $20 and back down to $2. The problem there is to access that platform, you had to own those tokens, and owning those tokens subjected you to price volatility that probably significantly outweighed the utility you hope to gain from actually using the platform. So one of the issues that is limiting the blockchain space in general is the fact that price volatility makes it anyone who holds tokens for, say, a Salt Lending, or anyone who even holds other crypto assets, either as a store of value or a medium of exchange, can't actually realize that utility or benefit from that utility until we can separate that price volatility. And that's one of the sort of the main things that you can do with Market Protocol. So Market Protocol has a number of other use cases. Because everything we're doing is a derivative relationship, you don't actually need to take custody of the underlying. So with Market Protocol, we can create cross-chain trading relationships as well. So when a market contract is created, we specify a few different things, and some of the main things are the base currency, and that's what a trader would make or lose with the market contract. We specify a reference asset, and that's where we're deriving price. And then we specify sort of an Oracle solution that we use to bring external data onto the Ethereum blockchain. So for an example, another example of a cross-chain trading relationship with Market Protocol is we can create a contract that has a base token of Ethereum that derives value from Monero, for example. And we're going to, at settlement, get the price of Monero from Binance. And we use right now our alpha product is written through a service called Oracleize It, and we use Oracleize It to bring the price of Monero onto the Ethereum blockchain. So what that does is that allows a trader to stay on the Ethereum blockchain and get exposure to the price of Monero resolving in Ethereum. So they make or lose Ethereum based on how Monero moves relative to Ethereum without actually ever taking custody of Monero. So one of the things that a lot of people are focused on right now is figuring out how to enable cross-chain trading, or figure out how to enable tokenizing of traditional assets. For most people, for 95% of the population, myself included, I don't actually care about taking custody of any of these assets. I don't take custody of Apple stock, for example, because I want to actually vote on corporate action. I take custody of Apple stock right now because I have to. That's the only way I can get price exposure, as if I owned Apple stock. With derivative relationships, and specifically with Market Protocol, we've now enabled traders and businesses to actually receive cross-chain price exposure or off-chain price exposure without taking custody. So another example of a use case for Market Protocol is you can create a contract that is make or die, for example, versus Apple stock. So what we've done there is we've created what is a more traditional trading relationship, but we've done it in a decentralized framework on the Ethereum blockchain. So that's another kind of interesting application of Market Protocol. I think for now, we'll move on. If Phil wants to maybe introduce the team and talk about the team.
Yeah, sure. I'm happy to. So Seth and Collins introduced themselves a little bit. We also have 3 other developers that are working with us. So I think the first we should introduce is Eswar. He's working with us. He's from Bangalore, and he's been kind of leading the development on our DApp. Perfect has been working a lot with us on the protocol side, and then also has transitioned to the DApp as well. And then Presented has been working with us again, same thing, kind of help us with a lot of the testing needs of the protocol, and then has now been making the transition more to helping us with features as we roll out the DApp that allow people to create contracts, test those contracts, create some trading applications with it that will be a simulated exchange type functionality, and also some leaderboards for trading, so people can understand how this will work as it's deployed onto the Ethereum blockchain. We have a couple other community members, and maybe I'll let Collins take the community management, not community members, but community managers that are working with us as well. So I'll let Collins introduce those guys.
Yeah, I'd love to. Sorry about that last time. I completely dropped the connection to everything, but I'm back now. We have Lazar, who is our internal community management lead, and he's doing a really great job of hopefully getting everybody in the rest of the world to know about Market. So thank you, Lazar, for setting this up and for introducing everybody. We really appreciate that. And then we have Moz, too, who's helping us. He's helping Laz take care of all of that. He's educating everybody else about that, too, helping us write some articles. So we really appreciate that from those guys, and we look forward to continuing to grow that more and more and more.
Great, thanks. We're working with a couple other groups. So we're working with Token Agency in the United States. They're helping us with sort of our content and our community outreach. We're also working with a group called Spartan Group out of Singapore that's helping us with a number of sort of our Asian initiatives, which we'll cover next, helping us with some business development in the region, and they're also helping us with sort of building community out there. So there are a number of different things that I wanted to also cover in terms of project advisors. So one of our project advisors is Brent Tradman from Bread Wallet. Another one of them is Josh Frazier, who's a co-founder of Origin Protocol. And those 2 guys have been really helpful in kind of working on sort of our overall strategy to now. Let's see, where are we going next? So what we want to talk about a little bit now is our current roadmap, sort of what we've been doing, what we're focused on from the business side, and what we're also focused on from the development side. So the first thing is Market Protocol we've been working on Market Protocol since June of 2017. So we've been working on Market Protocol for about 11 months. And we've really only been a public project for the last few months. We were really focused on sort of developing the protocol and getting our sort of business to a point where we had something that was worth kind of speaking with other people about. So one of the things that we're really spending a lot of time right now on is building community and building partnerships. So Market Protocol is a protocol. So we sit on top of the Ethereum blockchain, and on top of Market Protocol, we need third parties to build different kinds of applications. So for example, the first kind of application a lot of people think about is a node or an exchange type implementation. So we definitely are spending a lot of time trying to find node partners. One of the things we're doing in Asia is we're meeting a lot of different potential application partners. So we recently announced a partnership with Amadeus, which is a group out of Brazil. Amadeus is focused on providing token liquidity to existing DApps. So basically, DApps will need to get XYZ token, and they will get them directly from Amadeus. They won't go on to Binance, for example, and source those tokens. The other thing that basically the issue or the downside of providing on-demand liquidity is they have tremendous exposure to actually the token holdings that they own. So using market protocol will allow them to effectively manage their risk and hedge with market derivatives. So in the traditional world, you see a lot of traditional hedgers or traditional businesses use derivatives to control their price volatility and to mitigate their risk. So an airline might hedge jet fuel, or a bank might hedge interest rates. That's exactly what Amadeus is doing by using market contracts, is they're hedging the price risk of their token holdings. The other partnership and the other thing that I wanted to mention right now, I think we announced this today, and to be honest, I believe we announced this morning, but a partnership with Virtus Group, which is a Singapore-based company that has a strong history in the trading of carbon emissions. Virtus Exchange is an upcoming exchange that they've developed that they're actually developing that's going to be using, they intend to use market protocol as the back end for their OTC derivatives business. So they hope to create some new contract relationships that may not exist or perhaps do exist, but certainly do not exist in a decentralized blockchain implementation on their upcoming exchange. So they hope to launch later in the spring with spot trading, so ERC20 to ERC20 or different spot crypto relationships. But they also hope to launch a number of digital asset-backed trading tokens or trading relationships. So we're happy to have them on board as sort of one of our first market protocol implementations. We are also talking to a number of different groups about potential application partnerships. So a lot of times when people think about what kind of application or what kind of implementation they can use for market protocol, they often think about just sort of exchange type implementations. I think that there are a lot of other kinds of ways that we can implement market protocol. For example, you can use market protocol in a sort of a wallet type integration where that ends up being almost a value add service that someone in that implementation could use. Would just be that wallet is kind of treating holdings as stable, and the way that they do that is they hedge or implement market protocol contracts on the back end, and that's something that ends up being abstracted away from the end user. So I think that there are lots of different ways that market protocol can be implemented, and exchanges are one of them, but other kinds of integrations are also possible. Things that I also wanted to mention really quickly, we are done with the first version of our beta DApp. That DApp will allow users to create contract relationships and trade those contract relations. I'm sorry, not trade. To create those contract relationships, test Oracle queries, confirm that everything is working correctly, and then also allows them to deploy those contracts and browse and view existing contracts. The second version of our DApp will be out later in the year, probably in the next, say, 6 to 8 weeks, and that will be a fully simulated exchange environment that allows users to trade and basically trade and build community around market protocol, and sort of it's designed to gamify and allow users to really kind of understand that market contracts are very similar to a lot of relationships and things that they're used to trading, but to sort of trade it in a beta environment that incentivizes them through bounties or other mechanisms to basically spend a lot of time trying to break our infrastructure at that point. And then we're also hoping to sort of get a lot of the bugs out during that time. What else do we have here? Okay, so I think Collins maybe wants to hop on next.
Yeah, that sounds great. I just want to tell everyone how they can get in touch with us and stay connected with market protocol in general. We're an open source project, which sure was mentioned at some point, but if not, just to make everyone aware of that. So all of our code base is on GitHub. We have some smart contracts on there too that people can look at. And we've used a really cool new product called Gitcoin that we're using to help find developers. So Phil's been posting a lot of bounties for different development work that he needs done and that he needs help with. So anyone out there who's an able developer who would like to help mark it out and maybe make a little bit of money along the way, we really encourage you to check out our GitHub and get involved with a project like that. Additionally, in terms of where our community's at, Telegram is a great place to ask anybody questions. Our Telegram is hopefully has somebody in there who can help you out or answer a question 24 hours a day. You can also check us out on Twitter. We've been starting to tweet a lot more, so we'd love for you to follow us on Twitter. And then we've been posting larger articles on Medium where the goal is basically just to give people a little more in-depth understanding about what market is, how market's solving various issues that we see related to the crypto/blockchain space and how we plan on helping them and helping the community solve that problem. So this is an AMA, so there are some questions on YouTube here, and I'm going to read those off just to try to make this go a little smoother, and I'll let Seth and Phil fight over who wants to answer them. Let's see, we can start at the top. The first question is, what's the difference between market protocol and crypto futures?
All right, I'll take it. So basically, the crypto futures. So I'm going to assume that's like the CME crypto futures. So one of the major differences is with the CME crypto futures is you have to be in sort of a centralized CME framework and system to even get access to those contracts. The CME, as sort of a gatekeeper, kind of controls this whole framework revolving around banks, clearing firms, and exchanges. So getting access to that in general is difficult. The second thing is they're much different products. The CME futures are denominated in fiat currency. They're denominated in dollars. So we're not really designing market protocol to address users in fiat. Market protocol is designed to allow holders of any ERC20 asset to use those ERC20 assets as collateral to invest in other trading relationships or other relationships. So Bitcoin futures are really a very different product. A final, I think, distinction, because we're trying to move on, is that they're very limited product offerings. Right now, the only product you can actually trade with in that framework is Bitcoin futures, Bitcoin against dollars. So I think that there are many other products and many other relationships that people want to trade that either currently are not offered or probably won't be offered on the CME. The CME requires sort of minimum levels of interest from institutional investors to even consider listing a product.
All right, thanks, Seth. I think we'll have time for all of these, but if not, I'm going to pick the ones that I think are most relevant based on the other questions that we've gotten previously and on like Telegram and stuff like that. But I think we'll get through them all. So the next one is, your white paper mentions that you're addressing the issue of margin trading and forced liquidations. Can you explain exactly how you do that?
Sure, I'll take that one. So with margin trading and forced liquidations, essentially that you post some amount of margin, and as your position goes against you, you're either forced to post more margin by your broker or exchange in the crypto world. And if you can't meet that margin call, essentially you're blown out of your position at that point. And when that happens, they essentially take control of your position and have to go to market to liquidate it. So if you're long, the market's selling off. As that happens, they're liquidating people's long positions by more selling, and you see this cascading effect of liquidation orders that amplify the magnitude of sell-offs. One of the issues that we have seen with this is things of like the GDAX Ethereum crash, where I'm going to use some rough numbers, but roughly Ethereum was trading somewhere in the upper 200s. In matters of seconds, it went down to trading in the tens of cents range and quickly recovered. GDAX, I believe, made everyone whole based on that trading, but they didn't have to, certainly. And that's the last time that GDAX has offered margin trading to date. So there's obviously systemic risk involved with that. Flash crashes have happened in traditional finance as well, and margin trading is certainly something that amplifies that. With a market contract, we have defined maximum upside and downside for both parties. So if I'm long or short, there's cap, downside, and upside, which means that we can guarantee when the contract is going to essentially enter into settlement. And so there's no need to go to market for a forced liquidation. It's a lot safer as market's selling off. A contract simply expires, and now someone has realized their maximum loss, and the other person has realized their maximum gain. This avoids kind of the amplification as markets selling off of liquidations. It avoids margin calls, which are hard to do in a decentralized fashion, and allows a much more orderly process for liquidating of positions.
Thanks, Phil. We just got a question that someone asked, can you expand on or explain something you said earlier, that market can decouple a given token's utility from volatility? So in the effort of making sure people understand the point that you were trying to make, Seth, can you expand on that, or maybe give an example, or just kind of talk about utility and why market's valuable and helping with price discovery, almost, if you will, or hedging with in the crypto community?
Sure. So right now, when you own a token, the price of that token, basically anyone who owns any token right now, the biggest thing they're exposed to is effectively anyone who owns any crypto asset right now is a speculator. There's very limited utility in owning a number of different crypto assets. So to go back to the salt lending example that we talked about previously, if you own salt lending, you're really just, I think, like, maybe to think about it a little bit in a traditional standpoint. So in the last year, the price of Ethereum, the biggest moves in Ethereum have been around 30%, 30 or 35% in a 24-hour period. To frame that appropriately, one of the biggest moves in any spot currency, like traditional fiat currency pair, in the last reasonable future was the pound moving against a number of different a number of other currencies, including the dollar on Brexit. And at that time, we saw the pound basically move about 8% relative to the dollar. So that was like a huge atypical move. Traditionally, a big move in the fiat space has been more like 1.5% or 2%. The daily standard deviation of Ethereum is like 8%, where fiat pairs are more like 0.5%. So the main point is that these crypto assets are basically too volatile to use right now for anything but speculation. What derivatives allow you to do is to decouple that price volatility from the utility. And the way we do that is through risk mitigation or hedging. So if I own salt lending tokens and I'm long salt lending tokens and I use those let's actually do something else. If I own say I own Ethereum, and Ethereum is proof of stake right now. If I want to stake those, if I want to stake my Ethereum right now, I'm exposed to the price of Ethereum, which will far outweigh the benefit of staking those tokens. With market protocol, what we can do is we can trade derivative relationships against our underlying holdings. So if I'm long Ethereum and I've staked that Ethereum, I can actually sell market protocol contracts to lock in the price of my Ethereum relative to US dollars. So I can sell an Ethereum MakerDAI contract that locks in the price of my Ethereum. So what that does is that allows me to hedge my price, but still consume sort of the utility. In this example, it's to stake those tokens. So what we can do with market is hedge our long positions and still consume the utility. We can stake those tokens, or we can use those tokens to access a platform like salt lending.
All right, thank you, Seth. We've got time for one more question, just to make sure we respect everybody's time here and keep this short enough that people don't lose their attention span listening to us talk about market so much. But it's something we can talk about all day. We all really love talking about it. I think this is a great question for you to answer, Phil, just because we can talk about kind of where market's going, what it's going to look like in the future, how people can use it. And someone asked, can anyone build a DApp on top of market?
Yeah, so anyone can build a DApp on top of market. As Collins mentioned earlier, our protocol is 100% open source. It's released under Apache 2.0. And everything's open source. We have good documentation about the protocol itself. We're working on an API layer to assist kind of implementations in an easier fashion instead of having to interact with the underlying smart contracts. But not only can anyone build a DApp on it, but we encourage people to. It's kind of our entire roadmap is making sure that there's a rich ecosystem of DApps, whether that's exchange-like functionality, wallets like Seth talked about. There could be portfolio tracking applications. There's trading stats, things of that nature. So there's a lot of different items that can kind of build a rich trading ecosystem around market protocol. And we'd love to see all of those pop up. We're happy to discuss any integrations, any help people need, anything they see missing in our current offerings to make sure that we can foster the innovation that's going to be needed to create a rich ecosystem around the protocol itself.
Thanks, Phil. I think in the spirit of time, that's the last question that we're going to take. As I mentioned earlier, the best ways to get in touch with the market team, especially on the community side, and find out exactly what we're doing and have all your questions answered is to join our Telegram. Please join that. Ask any questions you have. We would love to hear from you. We'd love to answer the rest of the questions that were asked today in Telegram. We will certainly make sure we do that within the next 24 hours. I think maybe there are 3 or 4 we didn't get to. And Seth and Phil, if you guys have anything else to say, but it was a pleasure to be on the First Market YouTube live chat. It was nice talking with you guys. Hopefully a lot of people learned a lot of things about this.
Yeah, you guys, thank you so much for joining us today. Really, really appreciate it. And we hope to just kind of grow these calls and grow our community. So please engage us.
Oh, Phil, sorry to interrupt, but will you talk about the developer call real quick that you've had, if anybody would like to find out more about the technical side?
Sure, yeah. Thursdays, 8 a.m. Mountain Time. They're happy to send out links to Telegram. It's also in our Discord. Our development community is mainly interacting via Discord. So there's also Telegram room, but .io/Discord will get you there. And there's links in there for the development.
Phil, can you say that last sentence one more time?
Tech side of things, or if you'd like to get involved in contributing to our open source code base also.
Can you say that? You cut out maybe 2 or 3 sentences on mine, so just in case you did for anybody else. Last thing, you were just announcing Discord address.
Yeah, marketprotocol.io/Discord. There's links in there to the call, and it's a great place to get involved with our development community. We have lots of bounties posted for open source contributions to the code base. So yeah, please engage us there on the tech side of things as well.
Thanks.
Yeah.
Thanks, everyone.
Bye. Thanks.